You may be familiar with buying a cryptocurrency and profiting when the value goes up. But did you know you could also short a cryptocurrency and profit when the value goes down? So what exactly is shorting? Shorting is the ability to borrow a crypto asset, sell it, and then buy it back at a lower price. You never really own it, you've just borrowed it, and so that gives you the ability to buy it back lower. For instance, if you borrow Bitcoin and you sell it at, let's say, 10,000, and the value of Bitcoin drops to 5,000, you've just made $5,000 in profit. And this is key because prices tend to drop faster than they raise. Now, how exactly would you short Bitcoin? First, you have to locate an exchange that you can trade on margin, because on exchanges that you can trade on margin, they allow you to borrow Bitcoin. So the next thing to do is you just borrow Bitcoin and then sell it. And that's what shorting is. So let's take a look at a chart to break down shorting for you. Now you're looking at Bitcoin versus the dollar on a 240-minute time frame on the Bitfinex exchange. And now what you need to do is borrow Bitcoin and sell it and collect for a profit when you buy it back. If you were to sell Bitcoin when this moving average crosses, when the 20-period moving average crosses below the 50, right here at 11,000, and buy back here at 6,000, you would collect a $5,000 profit. So this goes to show that you can not only profit when prices go up, but it's possible to profit when prices go down. So that concludes section 5. Now just to review, you should be able to develop a strategic trading process in the crypto markets. You should also be able to overcome some of your biases and limitations. And you should be able to explain why holding on for dear life is just not a viable strategy. Additionally, you should now be able to identify trends using price and time. You should be able to summarize why the trend is always your friend. And finally, you should be able to draw trend lines.